What's going on, everyone? It's Nick Vazquez, and we are back with another Greater Toronto Area real estate market update where, like always, we're going to break down the numbers for the GTA, talk about the market a little bit, and then after that, we will go into the numbers specifically for Mississauga. If you find this information valuable or helpful to you at all, please do me a huge favor and hit that like button. It does let me know that you're liking the content that you're seeing, and it motivates me to keep putting out content like this. Also, if you want to see more content like this, please subscribe. I would really appreciate it. No more dilly-dally, let's get started with total residential transactions. There were 6,474 transactions reported in June, which is down 41.4% compared to last year. On a seasonally adjusted month-to-month difference, sales were down 4.7% compared to last month in May. It is pretty typical for sales to be lower in June relative to May. That's just a regular seasonal trend that we usually see. However, it is true that activity in the market has decreased this year compared to last year and even compared to earlier in the year. Moving on to new listings. New listings are up a whopping 1% compared to last year. Basically the same number of new listings on a year-to-year basis, with 16,347 that we saw in June of 2022. Compared to last year, sales have dropped dramatically, but new listings have remained relatively flat. Because of this, it's leading to more balanced market conditions and a lot more choice for buyers to choose from. Gone are the days of listing low and then hoping for a bidding war. It's much more common that the price you see on a listing is actually the market value of the home. Although, to be honest, a lot of agents and sellers are listing high and then they're just chasing the market down. Don't be one of those. Just don't do it. Too many people think that listing a little bit higher than what your house is actually worth is good because then you have bargaining room with the buyer, but I'm telling you right now, this usually doesn't work out that way. At the end of the day, usually what's gonna happen is you're gonna chase the market down, keep lowering the price, and then you're gonna end up selling for less than what you would have sold if you just priced it properly from the beginning. But that's a convo for another time, so let's move on to the average selling price. The average selling price for the GTA as a whole is now $1.146 million. That number is up 5.3% compared to last year, but has gone down around 3% compared to last month, seasonally adjusted, of course. The annual price growth of 5% was driven primarily by lower price market segments, including townhomes and condo apartments. And speaking of the 5% growth in price compared to last year, yes, the market is down, things have dropped a lot since February, and 5% doesn't seem like much, but that's because we're used to seeing 20% year-over-year growth in price. But think about it like this, just a few years ago, a 5% year-over-year growth in the real estate space was basically like a home run. Like, that's great growth. So yes, the market is going down, but 5% is still a lot compared to last year in a normal real estate market. So speaking about the market in general, it does look like this summer is gonna be a great market for buyers to capitalize on what's going on at the moment. With more and more active listings on the market, and a lot of buyers who were going to buy are now waiting on the sidelines just to see how far prices go. The people who are actually actively in the market looking to buy a home have a lot more choice. There's so many homes on the market, they could pick which one they want. They have a lot more negotiating room just because there's not as many buyers out there, and it's just a really good time to be a buyer right now. These market conditions are expected to continue throughout the summer. Now, that being said, it will be very important to watch what's happening with the number of new listings. So, for example, if sellers who were going to be listing their house decide that they'd rather wait and kind of see what's going to happen, that might push the active listings or the new listings that come on the market down, which could constrain supply a little bit and then push prices back up. Also, people and businesses are gonna continue moving to the GTA, and they're all gonna need a place to live, whether they buy or rent. And the buyers that are sitting on the sidelines right now are going to be re-entering the market at some point, if they can afford to, of course, with interest rates going up. So all of this is just to say that despite the short-term impact that rising interest rates is having on the market, making price go down, the long-term demand is still gonna be very strong for home ownership. And over the long term, that is gonna make prices continue to go up. Right now, there is a really nice opportunity zone for buyers where prices have already gone down about 10 to 15% since the peak, but interest rates haven't gone up that much yet. Keep in mind that the average variable interest rate over the last decade was 3.9%. We are still below that right now. We know for sure that interest rates are gonna rise this summer. That's a certain, that's a fact, that's gonna happen in like a week, but we don't know what's gonna happen with prices. Yes, they could go down, and that's probably what's gonna happen, but we don't know for certain. There is a fine line to walk between waiting for prices to drop more and letting the interest rate get too high. As the interest rate gets pushed higher and higher, the market is gonna have to drop by larger and larger amounts to keep your monthly payment the same. And I personally don't think the market's gonna fall that fast to make monthly payments more affordable. For example, in February, if you bought $1 million home with 20% down and an interest rate of around 2%, your mortgage payment would have been $2,954 per month. Now, if you bought that same home in June, it would be worth around $850K, which is a 15% drop, but your interest rate would now be around 3.2%. Making your monthly payment $2,933. The payments are basically the same. It's not really more affordable or anything, even though the price dropped 15%, but now more of your monthly payment is going towards interest and not going towards your equity. If we see another rate hike of 0.75% in July, like the US just did, and Canada kind of follows suit in what they do, so it's very likely that this could happen, then the market would need to drop by another roughly 10% to keep your monthly payment the same. Is that likely to happen? I mean, it could happen, but by the time it happens, it's likely that interest rates will already be going up again, so it doesn't really matter. My point is if you were planning to buy this year, but now you're putting off your plans and you're waiting because you want the market to drop more, the least you could do is get pre-approved now and lock in that rate for the next 90 to 120 days. That way your rate will get locked at whatever it is today and won't go up with the next rate hike that's supposed to happen on July 13th. And you can take advantage of any more price drops that happen throughout the summer. Shoot me a message if you'd like me to connect you with someone who can help you lock in that rate before the next rate hike, which is on July 13th. Anyways, let's go into the numbers for Mississauga. There were 596 sales in Mississauga, and the average price of a home is now just under $1.1 million. The market in Mississauga is 7.3% higher than last year and 4.6% lower than last month. The average price for a detached home is just over $1.6 million, about $70K less than last month. A semi-detached will cost you $1.5 million, which is about $65K than last month. The price of a townhome is now $1.09 million, which is more than a semi. That number is actually $40K more than last month. A condo townhome will cost you $819K, which is about $50K less than last month. And finally, a condo apartment averages in at around $660K, which is about a $12K drop from last month. Anyways, that's it for now. I do hope you found this information valuable and informative. If you have any questions at all, if you are thinking of buying or selling a house, if you just want some advice, some direction, please feel free to shoot me a message. My contact info is right here. Would love to help, would love to answer any questions that you might have. Thank you so much for watching the video. I do appreciate each and every one of you. If you like the video, please, like I said at the beginning, please give me a thumbs up. It does show me that you're liking what you're seeing. Also, it just gets the video pushed out to more and more people. So just take a second and hit that like button. Would seriously appreciate it. Also, if you want to see more content, you want to keep informed with what's going on in the market, please make sure you are subscribed with notifications turned on. That's it for this week. So thank you again for watching and have a good one.